Hello, I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome to the ESS BIZTOOLS podcast. Today I'm joined by Trevor Marchant, the Managing Director of Marchant Dallas, who are the publishers of the well-known Boss Factor Library. How are you today, Trevor?
I'm well, thanks, Peter. Once again, thank you for inviting me onto this podcast. I always enjoy having a chat with you about what's going on in the accounting world and the business world. So yeah, let's talk about your latest client advisory ink paper. You've set some pretty some interesting comments there about small businesses and some of the stats. That was fascinating.
Yes, and that article was headed with, were they warned?
Yeah,
So for the accountants and bookkeepers, and that's the majority of the listeners we got to these podcasts, Trevor,
yeah,
I think you need to just sit back. I'd like to invite you to sit back and think,
yeah.
were they warned? And we're talking about people starting in business. And the preamble to all this is that in the Financial Review about 6 weeks ago now, there was an article published that had been prepared by Paul Robson, who's the CEO of MYOB, who
Right.
most accountants and bookkeepers know
Yeah.
who MYOB is, Trevor, of course.
Yeah.
And
Absolutely.
he indicated that fiscal management was poor, and this was what was causing the problems with businesses that failed after 6 months in
Yeah.
operations.
Yeah.
So what Robson was saying, they started off okay. They had a great idea or a great product, and they run into roadblocks after 6 months. I've
Right.
seen that happen myself, and it made me think when a couple of them were people that I had some dealings with, did we warn them? Did we tell them about all of the obstacles? Did
Yeah.
they receive appropriate services from bookkeepers or accountants to get them ready for the journey? And by that, Trevor, I mean, did they have a plan?
Yeah.
And did they have a budget and a cash flow forecast? And was it realistic? You've been around and you're an
The
ex-banker,
role of
so
the accountant or the bookkeeper is a lot more than, I think it's a lot more than tax and compliance, isn't it?
oh yeah,
So
definitely.
what are your feelings then on, what this gentleman is saying about these failure rates? What do you think the accountants and the bookkeepers need to do more than what they're doing now?
Yeah, good question, Trevor. First of all, I should say, because I'm sure some of our listeners might be jumping up and down a bit or
Yeah.
talking to themselves. We know that not all people who go into business seek professional advice in the first instance, and
Yeah,
that's a huge problem.
Yeah.
And I think that is an opportunity for the accounting and bookkeeping professions to be promoting the services that accountants and bookkeepers offer, and that is we can give advice to businesses before they start business.
Yeah.
And in fact, that should be a must. I'd really like to see that they've actually got a certificate that they've been through a training course before, but that probably will never happen. So in that preparation, they need a realistic business plan, not a 50-page document. It might only be 3 or 4 pages, but it's trying to identify what they're trying to achieve, what's their resources, how much money are they going to need, and the accountant's role is to make sure that they've thought that through. I think what Mr. Robson was getting at was most people start off with enough money, or they think they've got enough money,
Yeah.
but have they really taken into account the realities of modern day business life? And the first one that I picked on when I wrote that article in Client Advisory Inc. Last week was, did anyone warn them that suppliers may impose what appears to be harsh trading terms? Because there's a lot of suppliers for a new business or even someone that's bought an existing business imply terms of cash on delivery.
Yeah.
So
Absolutely.
if the truck driver turns up and there's no money, well, he packs it back, or he doesn't even take it off the
Doesn't
truck.
deliver the goods.
He
That's
doesn't
right.
deliver the goods. Then there's others that will impose delivery schedules and then payment arrangements, 7 days, 14 days, 21 days. Did anyone warn the business to make some inquiries first, to check with the key suppliers they want to deal with to see, number one, will they give them a credit facility? And number two, what will be the terms of payment? Because I think what happens is people think they're all going to get 30 days. And some people will say to them, oh, yeah, you can add on another 10 days to that. So really take 40 days. But in 2024, that is not really the market conditions as I see them. Many suppliers are saying, no, we've been hit. There's too many failures. And the preamble to this story was small business failure rates have jumped 34% this financial year, according to the Australian Securities and Investment Commission. So if you're running a supplier business, you're very much aware of this and saying, we've got to be careful with new accounts. So I think that's the first problem, Trevor. I don't know whether you got something to comment on that.
It's just a waste of energy and a waste of money, isn't it? When you think about all those startups, those entrepreneurial people who, as you say, probably have a very good idea, and they're keen and they're passionate about what they're doing, but getting it out there into the marketplace, it's almost like there's a half a dozen things or a dozen things that need to be ticked off between the entrepreneur, the startup, and the accountant to get this thing out of the blocks. I think that's probably what I would be looking to do. I think all accountants should have this sort of mini package, if you like, of helping startups move along. And I don't think it's just startups, because once you get past that first 12 months, 18 months, there's a whole new set of rules come into play, don't there?
Oh, yeah, there's always ongoing challenges, yeah.
I remember a coach of mine, when I developed this program on referrals, and I hadn't made any sales. And I remember him being in my office and asking me what I was doing. And I said, look, I'm just improving this. I just want to make it really good before I take it to the market. And he walked around behind my chair, put his hands on my shoulders, gave them a gentle rub. And he said, look, I'm going to suggest you do one thing. Go out there and try and sell this. He said, if you can sell it, then you can always improve it later. He said, but make sure that you've got some people out there who are willing to pay for this, who are willing to buy this. And I think, once again, too often we assume we've got a good product and that it'll walk out the door. People will clamour for it, but that's not the case. You have to know what your target market is. You have to do some marketing, as you say, a mini business plan, and you have to go sell it. You know, the biggest challenge, I think, for an entrepreneur is that first profitable sale.
That's right. Yeah.
And then you've got something. If someone is prepared to buy something from you, then it's a matter of fine-tuning it, and then improving on that. So, I think there's some, when you say, were they warned? And I guess there's an implication there that someone needs to warn them, and it's probably the accountant or the bookkeeper. And that might be a bit harsh, but I think that's, if we're going to be the trusted advisor, that's the role, isn't it? I mean, where else do you get the advice from?
That's right, Trevor. And anyone else giving the advice, I think could be suspect, unless it's a bank manager or a financial advisor, of course, who know these things.
Yeah, well, I mean, I don't think, once again, financial advisor, I take that point. Bank managers, they were, I'm not sure that they are now, and I still love them, but I think the accountant, and it's not that long ago, well, I was looking at the financial services industry in detail, and the accountant is still at the top of the totem pole when it comes to the trusted advisor. And of course, the bookkeeper's up there as well these days. We know that. So that's why we've got to give this advice. Yeah.
Okay, so it's the cash flow that's the big issue. So that's the first thing, is the payment terms that the business has got to respond to. The second thing that Mr. Robson then commented on was their receipt of money from their sales. Now, if the business can go out and just deal with consumers who have either got cash or credit cards, and they don't have to give credit, that's great. They're probably not the group that's of concern here,
No.
although they also get into difficulties, unfortunately. But for
Yeah.
today's discussion, we're really looking at people who are dealing with other businesses, so they have to offer credit.
Absolutely.
The problem there is there's a myth getting around that everyone pays in 30 days. They don't. In fact, the Australian government needed a shake-up a couple of years ago when Mr. Morrison was the Prime Minister to tell them they had to pay in 30 days. I haven't checked lately, but I suspect that some
Well,
government departments have got a bit behind.
You make a point here, Peter, that Australia has the highest debtors days outstanding in the world.
This was a report that was released by some committee, International Financial Committee, about 5 years ago now, which identified Australia had the highest debtors days outstanding in the world.
Any reasons for that? Any whys?
I don't think we're careful enough, and
Right.
this gets back to the advice going to these people that Mr. Robson's talking about that had failed, because I think too many people assume that the credit customer will pay, say, in 30 days. That doesn't happen in the real world. The average debtors days outstanding in Australia is up around 65 to 70 days. And there's plenty of people got debtors days outstanding of around 100 days. That's a
Yeah.
long time to have your money tied up, um, owing to you. But why? Well, why does this happen? Well, the first thing I think is
Mm.
invoices are not produced well, in the first instance is checking out the new customer. You need
Yeah.
to check them. You need to check through organizations like Dun and Bradstreet. You sure it's going to cost a subscription, but you need to pay it so you
Yeah.
can check out that you're not taking over someone else's problem. They're glad to get rid of that client because they're too slow in making payment. The other big issue, though, I think, Trevor, is the dispatch of invoices. They're too slow. I've seen some people take weeks to send invoices out
Yeah.
to their customer. Oh, that's all right. They'll pay. Yeah, well, no action starts and that invoice is received, does it? No one's going to do anything. So
Now,
it's
look, I've got a lady that does some work for me, and I have to ring her and ask her to send me an invoice.
Hmm.
It just
Yeah,
it could be weeks, and
yeah.
I have to ring and say, you haven't sent me your invoice yet.
The next thing is to stamp or clearly identify on that invoice the due date for payment. So if you've negotiated with a new customer and they've signed an agreement with you, they're going to pay you in 30 days, and you're
Mm.
issuing an invoice, whatever day of the month it is, it's due 30 days after that today's date. Not at
Yeah.
the end of the month for 30 days,
No.
which some people will take. But far too many businesses, and this is the advice the accountant should be giving to these new people, make sure you clearly identify, get a stamp. This invoice is due for payment. Calculate the 30 days if that's your terms of trade and write it on there. Now, some industries, like the meat industry that I've got a lot of background in, have 7 and 14-day accounts. So they need to clearly
Yeah.
identify them because they're dealing with a highly perishable product. It's gone, sort of thing. The next thing then is debtors statements.
Mm.
Not all businesses issue debtors statements anymore, but so if your client is not going to issue debtor statements, I think that should be clearly told to their new customer. So the customer's not sitting there waiting for the statement that never turns up because they're not issuing them.
Yeah.
But the majority, from what I can see, are still issuing debtor statements. But
Yeah.
Trevor, some of them take too long
Mm.
because again, the customer is not going to do anything about making that payment until they've received the statement. I
Mm.
think the statement should, first of all, be prepared within 24 hours of the end of a month. That means the business needs to have its bookkeeping up to date.
Mm.
And secondly, they should be emailed. Now, some people, oh, we can't email debtor statements. Well, in some parts of Australia, it's taking 6, 7, 8 days for mail to get delivered. I think we should be emailing debtor statements,
Yeah.
which are very clear then and then the business needs to calculate at the end of each month what the debtors days outstanding are, which is an easy calculation. The accountant can show them how to do it, and they need to then have an understanding. If they've prepared their budgets on the basis of 30 days outstanding for debtors, for argument's sake, and they do the calculation and they see it's coming in at 42 days, they're going to have cash flow problems unless they can try to collect that extra money.
Okay, so the things that you're listing there are they're things that you feel an accountant and or a bookkeeper should be sharing with their new clients. Is that what you're saying?
Most definitely. This is what they're paying you for. For you
Right.
people who hope accountants and bookkeepers. This is the some accountants and bookkeepers ring me and say, well, we don't know where to start on advisory services.
Yeah.
Well, this is lesson number one.
Yeah.
With someone going into business to start a business, we've gone through the cash flow control. Now, there's plenty of other things in cash flow. Try to encourage them not to run out and buy a brand new car that's going to cost $80,000. They can get a car for $25,000. It won't be brand new, but it'll look all right, and it'll get them around the town. They need to conserve their capital, but there's fundamental things about making sure they're aware of the payment terms that suppliers are likely to impose on them, and therefore they should be having negotiations with them. Secondly, they need to confirm to their new customers what their terms of trade are. And if they don't offer 30 days, they won't get business accounts. So that's the other fact of life we need to tell them.
Yeah.
And then thirdly, they then need to make sure they've got the system set up that there's no reason for delay.
Yeah.
A few years ago, I ran a seminar in a mining town. I ran seminars for the Australian government talking about corporate governance, not on these issues, but in the question and answers, people started asking me about how do they manage their cash flow? What's the director's responsibilities on cash flow? And so I mentioned debtors' days outstanding, and a lady said to me, well, what should debtors' days outstanding be? I said, what's your terms of trade? Oh, I don't know. That's up to my father. That was the answer. And I said, well, let's say it's 30 days. They should be 30 to 40 days, I would have thought. And I said, what is yours? She said, I don't know. I don't know how to calculate it. This was the office manager in that business. So I said, well, how about we have a cup of tea? So we had a cup of tea and coffee, and I got her and I said, okay, tell me your turnover, which was well into the millions. How much is you owed by debtors at present? And I calculated it was 104 days was their debtors' days outstanding. She said, is that high? I said, very, very high. And so this was now her accountant should have communicated all this to her, I think.
Yeah, I agree.
It's an awareness, and it's really the whole theme that's within ESS BIZTOOLS that we're really promoting at present. Accountants, we're not just asking you to prepare a set of financial accounts 12 times a year for the sake of it, because by preparing those accounts, there is then key performance indicators and other business metrics that come out of those accounts. And that's the vital information. I think it's more important than just the financial accounts are obviously part of it, because all this other information can flow, information that can mean something to people.
Okay, so are you going to release or re-release some of this information to accountants and bookkeepers? Because it seems to me like it is based on what you're saying that we should send out, or you should send out some information on this. Is that your plan, or?
Well, we've produced a new product package, Trevor. ESS BIZTOOLS had 3 levels of product packages. We've put a fourth one in that's just right at the beginning. So we're calling it Advisory Intro. And it talks about all of these sorts of issues, because as far as I'm concerned, these are basics and it's one of the reasons why Mr. Robson's making the comments that it's the financial control that's at the root of a lot of problems.
I know you're
businesses.
Right. You're absolutely right, and it's interesting because I've worked with a lot of small businesses over 30 years. In fact, 5,000 plus, and I have to say to you that there would only be a small proportion of those businesses who would think along the lines that you're talking. Their main focus is their passion for their product or their service and getting it out into the marketplace, hiring the right people to support them, and their overall general management of the business. There's not a lot of business owners in that early stage that would think along the lines that you're talking about in terms of the financial management of the business. So this is a great opportunity, I would have thought, for accountants and bookkeepers to jump in there and get that part right.
Oh, and this is, there's a few roles that ESS, in our material in ESS BIZTOOLS, we suggest that could be a marketing role or could be a quasi-legal role.
Yeah.
This, though, there's no ifs and buts about this. This is pure business financial advice, accounting advice, making sure your clients understand the terms of trade that their suppliers are going to impose, understand that they need to line up their customers. So Trevor, for our people listening to this podcast, we started off with the theme, were they warned? Do you think accountants should be warning people? Why don't you send us an email? You can send it to me, Peter at essbiztools.com.au, or if you prefer to call to Trevor. Trevor, what's your email?
Mine just Trevor at Marchant Dallas, as in Texas, marchantdallas.com.au. More than happy to take any emails and answer your questions. And if I can't answer them from a financial point of view, I would sort of defer those to Peter.
And we will be publishing our next edition of Client Advisory Inc. Next week. And we will be commenting on some of the, we won't name you unless you want us to name you, but we will comment on the comments that we get
some
back.
of the questions that we're getting,
Were they warned? Now, Trevor, let's move on, because you also wrote an interesting article in Client Advisory Inc. 3 questions to help you work less. Some people are saying, great, earn more and make a real difference in your clients' lives.
Yeah, well,
what were you covering?
Business for me has always been about people, product, process, and you get that mix right, you turn that into profit. So I guess the 3 questions I'm talking about here really, they're probably focused a bit more on accountants and bookkeepers more so than SMEs. But the 3 questions, how do you retain your best people, find and attract more of the same? Now, whilst there are staff shortages across the board, there are some things that you can do to be the go-to firm, small business, accounting firm, bookkeeping firm in your location where people would be more attracted to. It's a bit like if you're going to play a sport or join a ballet or join a musical group, you tend to want to go to the best one. And so it's about positioning yourself to be the go-to firm in your area. So that's number 1 thing, and there are ways to do that. The second thing I talked about there was referrals. Small businesses grows off the back of advertising and referrals, or word of mouth. And word of mouth and referrals are a little different. And I don't think enough is being done in that referral space. People are generally afraid to ask. Well, I have a technique which is not asking for referrals. It's inviting people to invite their friends to have a chat with us about certain products and services. And we call that the referral code. So there is a way around that, and particularly for accountants and bookkeepers, because most of their new work, based on all the research I've done, is on the back of referrals. Yet we don't actually have a system. So if you think about that, the system is flawed, isn't it? We're relying on growth in the accounting industry on the back of referrals, but we actually don't have a system. We wait to see what comes in the door. How can you plan successfully and budget successfully for growth if you don't have a system? So we have a system for that. And the other one was about just generally keeping morale and productivity high. That's about your retaining of staff. And part of all this is mixed in with our Boss Factor library, that collection of publications that we have, which is all about largely about personal and professional development for people, and a lot in there about working on your business. We talk about working on and in the business, and you and I have discussed this many times. we're all pretty much stuck working in our business. And I don't think we take that time out, as you talked about, quality time, enough to sit back and think about working on the business, which is more strategic, of course. So they're the 3 points that I'm really getting at there, and more than happy to discuss any of those thoughts with anybody that would like to have a discussion about them.
Yeah, thanks, Trevor. Some very interesting points there. Very valid points that accountants and bookkeepers need to be thinking about. And also, of course, each of those points could also apply to their clients, so they need to be talking to them.
Pass that on.
And this concept of quality time, I think, is very important. People need to take some time. I'm not suggesting they spend a day a week, but one of my colleagues sent me an email during the week and indicated that Friday's her thinking day, her quality day, and she no appointments, no phone calls. She just wants to sit down and think and plan her business. Whereas plenty of other people do it in an hour or so, just sitting back and thinking. It can be a problem if you're going to do it at 9 o'clock at night, because people get tired and don't think, or the family questions start arising on various issues. So think about it.
Well,
how you're going to plan your business.
There's an old adage, Peter, that I read many years ago, and I try to stick to it myself. But it's when you work between 9 and 5, that pays the bills. But if you're prepared to work from 5 a.m. to 9 a.m., that's where you create your wealth, because that's your think time, that's your creative time. Now, it doesn't have to be 5 a.m. to 9 a.m. It could be or an hour or two. But when you think about it, you're talking about the quality of time. And the lady that takes Friday off, she's only actually devoting 20% of her time, isn't she? 5 days, taking 1 day out. That's only 20%. 80% of the time she's working in the business, and then 20% working on the business. I mean, I think that's a reasonable percentage.
Yep.
I think we should all be spending at least 20% working on our business or more. But that's a good start.
Okay, Trevor. Well, thank you for being with me today. So we've been commenting on the comments that we made in Client Advisory Inc. Edition number 13, which was released last week. And we're going to continue this theme, Trevor, aren't we? We're going to have a podcast like this in the week following our articles in the Client Advisory Inc. If you're interested in receiving Client Advisory Inc., please send me an email, peter@essbiztools.com.au, and I will make sure that you are put on the mailing list so that you can receive it. So thank you very much. And obviously, we are looking for feedback. The question is serious because Mr. Robson has raised some serious questions for accountants to consider, I think. Were they warned? Is it your role as an accountant and bookkeeper to make sure the people who have come and talked to you before they start a business are warned about a whole range of issues, not just that 2 or 3 that we've talked about today, but that will give you something to think about. Until next time.
Well done. Thanks, Peter. Cheers.
Thanks, Trevor. See you later on, eh? Bye-bye.
Bye.